Hey folks, CB3 here with another live update. Today is Monday, March 17th, and happy St. Patrick's Day to everybody. The market is at an inflection point. Just last week on Thursday was CB3 Live, and I told you what was going on, what I anticipated for the week ahead. We had a really strong day Friday, but now what? The market is at a turning point. Stay with us. CB3 Live update begins now. The stock market experienced a significant downturn last week with the major indices falling into correction territory. A correction means that the market is 10% below the lifetime high. We hit that in the NASDAQ the week before. The S&P joined it on Thursday. Now, both markets closed stronger on Friday, but they're still in a deep downturn. And what we're seeing here on Sunday night as I record this is that the overseas markets are looking strong, but the S&P 500 itself is not looking strong. So despite the rally that saw the S&P climb 2.1% and the NASDAQ advance 2.6%, it's not enough to prevent another losing week for the three major averages we follow. So what have we done? We've gone to 10% cash in GI and an astounding 43% cash in CG. We've trimmed some positions within DS, but as you know, that program always stays fully invested, and that's the way it's always going to be. So what were the key drivers of this downturn? Well, President Trump's readiness to disrupt the relationship with major U.S. trading partners has heightened fears of a deeper decline into a bear market. I don't think that's going to happen. If it does, it's going to be shallow and it's going to be quick. But the tech sector in particular has been hard hit, with companies like NVIDIA significantly being hurt, down 20% from its recent high. So these factors combined with economic deceleration have prompted investors to say, you know what, maybe I need to lighten up on equities and I'm going to sell some. So what's ahead for this next week? There are several market moving events that investors like myself will be closely monitoring. The Federal Reserve is scheduled to meet on Wednesday with expectations that interest rates will remain unchanged. However, the market participants will be scrutinizing the Fed statement for any hints of future rate cuts, especially in light of recent softer inflation data. So CPI and PPI from last week actually were favorable. So I'm hoping the Fed looks at that and says, yeah, let's go ahead and cut another quarter point. So we'll see if that happens. I certainly hope it does. Monday's release of February's retail sales will provide insights into consumer spending trends, which have been softening. So I want to see a good number later on this morning. Also, NVIDIA's GTC Developer Conference could be quite a catalyst for the tech sector. So what we're hoping to see is positive news there from NVIDIA, and then corporate earnings from major companies like Nike and Micron will also be under the spotlight. So in summary, despite the recent volatility, many Wall Street strategists and yours truly, your investment advisor, remain optimistic about the market's potential for growth by year end. I think this just needs to shake out. We're going to have these tariffs eventually even out. It's going to be better for the U.S. We're going to get this done. We're going to get the Doge drama behind us. When we settle down, I think you're going to see at the end of the year, we're going to have a nice year. It may not be the 29% that CG had last year, but the 2025 target, according to Goldman Sachs, is for the S&P to be about 6,500. We've got Yardani Research, which is another investment company in New York, saying 6,400 in the S&P. So these projections still indicate potential upside and good upside, although not blockbuster like the last 2 years. Nonetheless, we're watching it. We stay on it all the time, guys. Watch for our daily tweets. We'll see you the next time on CB3 Live Update.